Hey folks, I hope you're doing fine. Please, before we get into details of today's video, I want you to be fair with me. If you find my personal analysis helpful, subscribe. Alright, today is November 12th, 2025. Market is open and okay. From what I'm seeing today, SoFi is trading at $31.59, up 64 cents or 2.06% today. And you know what's driving this? Yesterday, SoFi announced they're launching SoFi Crypto, making them the first nationally chartered bank in the United States to offer consumer cryptocurrency trading. This is massive, and from my research, the market is finally understanding what a game changer this is. So let me walk you through everything that happened, why this crypto announcement is so significant, what CEO Anthony Noto said at the KBW conference, and what this means for the stock going forward. Alright, so let me start with the news that's driving this rally, because from my research, this is one of the most significant product launches in SoFi's history. On Monday, November 11th, SoFi announced SoFi Crypto, allowing members to buy, sell, and hold dozens of tokens, including Bitcoin, Ethereum, and Solana, directly within the SoFi banking app. Now, you know what makes this groundbreaking according to what I've been studying? SoFi is claiming to be the first nationally chartered US bank to offer retail crypto trading. From my analysis of the announcement, this isn't just adding crypto as a side feature. Management's commentary ties the timing to OCC guidance that came out in spring 2025 that clarified what nationally chartered banks can do with crypto and blockchain. You know, this regulatory clarity removed a key overhang that had been preventing banks from entering the crypto space. According to what I've been reading from Reuters coverage, CEO Anthony Noto explicitly referenced this OCC clarity as opening the path for banks with SoFi's charter to offer crypto and blockchain services. What really caught my attention from my research is the strategic positioning. From what I understand, integrating crypto trading into a regulated bank app underscores SoFi's strategy to keep more member activity in-app, improving engagement and monetization across checking, savings, lending, investing, and payments. You know, this is the one-stop shop moat that I've been talking about in my previous analyses. Every new product SoFi adds increases the stickiness of the platform and the lifetime value of each customer. Moreover, according to management's comments that I've been studying, SoFi expects to extend crypto access to institutional clients as well. From what Noto said, institutional crypto services are right around the corner. So this isn't just a consumer play, this is positioning SoFi to compete with Coinbase, Kraken, and other crypto platforms across both retail and institutional segments. Now, let me walk you through what CEO Anthony Noto said at the KBW Fintech Payments Conference yesterday at 1:55 p.m. ET, because from my research, his comments provided crucial context on SoFi's strategy. According to the transcript recap I've been reviewing, Noto emphasized SoFi's transition to a full-service digital bank, with non-lending segments now representing a growing share of revenue. He highlighted that SoFi has delivered 8 consecutive quarters of generally accepted accounting principles, profitability, which from my view demonstrates the business model is working. From what I've been studying, Noto talked extensively about SoFi Pay for cross-border remittances, mentioning the partnership with Lightspark to launch blockchain-enabled international money transfers starting in Mexico later in 2025. He also discussed the SoFi USD stablecoin roadmap and ongoing AI adoption to improve security and customer experience. You know, when I hear a CEO lay out a roadmap that includes crypto trading, stablecoins, blockchain remittances, and AI, that tells me this company is thinking years ahead of where they are today. Moreover, according to what Noto emphasized, SoFi's approach is differentiated because they're integrating all these capabilities into a single regulated banking platform. Competitors like Robinhood or Coinbase offer crypto trading, but they're not banks with deposit accounts, loans, credit cards, and investment accounts all in one place. From my analysis, that integrated ecosystem creates switching costs and network effects that standalone crypto platforms can't replicate. So for trading phase, let me talk about how the market reacted to this news because the price action tells us a lot. From what I've been tracking, SoFi closed Monday, November 11th at $30.95, down slightly from the Friday close of $30.54. But according to reports, Monday's session saw the crypto announcement released and the stock rallied to settle just under $31. Then today, November 12th, the stock is trading at $31.59, up 2.06%, which tells me the market is digesting the significance of this announcement. What's interesting from my technical analysis is that SoFi is now trading decisively above the $31 level, which was a key resistance zone. Moreover, according to what I'm seeing in the charts, the stock is consolidating in the $30 to $32 range after the massive rally from $28 volume has been heavy, which from my view confirms that institutional investors are accumulating shares, not just retail speculators chasing momentum. From my research into options activity, TipRanks noted heavy call volume in recent sessions, suggesting traders are positioning for continued upside. Moreover, according to what I've been watching, the implied volatility has been elevated, which makes sense given the magnitude of the news flow between the Q3 earnings beat, the raised guidance, and now this historic crypto launch. Now let me explain why I think this crypto announcement is such a massive catalyst, because from my analysis, most investors are underestimating the long-term implications. First, the addressable market for crypto trading is enormous. According to industry data, there are over 50 million crypto holders in the United States alone. SoFi has 12.6 million members, and according to management's brand awareness metrics, they're only reaching 9.1% of Americans. As brand awareness grows and more members discover they can trade crypto directly in their banking app, this could drive significant engagement and revenue. Second, from what I've been studying about crypto economics, the fee structure for crypto trading is highly profitable. Exchanges typically charge 0.5% to 2% on each trade, and with SoFi's scale, even a modest adoption rate could generate tens of millions in annual fee-based revenue. Moreover, according to my calculations, if just 10% of SoFi's 12.6 million members trade crypto and average $1,000 in trading volume per year, that's $1.26 billion in gross merchandise value. At a 1% take rate, that's $12.6 million in revenue, and that's a conservative scenario. Third, the regulatory moat is significant according to my assessment. From what I understand, SoFi is the first nationally chartered bank to offer this, which gives them a first mover advantage and potentially years of lead time before traditional banks like Chase or Bank of America launch competing products. Moreover, according to what I've been reading about bank regulation, the compliance and risk management requirements are substantial, creating barriers to entry for smaller fintechs. From my research, this crypto launch needs to be viewed in the context of SoFi's broader product roadmap. According to what Noto discussed at the conference, SoFi is also launching a stablecoin called SoFi USD, expanding SoFi Pay for international remittances using blockchain, partnering with Lightspark for Bitcoin Lightning Network transfers, and integrating AI across the platform for fraud detection and customer service. When I connect all these dots from my analysis, what I see is SoFi positioning itself as the leading digital bank for the next generation of financial services. Traditional banks are slow-moving and risk-averse when it comes to crypto and blockchain. Standalone crypto companies like Coinbase don't have banking licenses and the ability to offer loans, deposits, and integrated financial services. From my view, SoFi is threading the needle perfectly, operating as a regulated bank while moving at fintech speed to capture emerging opportunities. Moreover, according to what I've been studying about the demographic SoFi targets, high-income millennials and Gen Z professionals with average incomes of $157,000, these are exactly the customers most interested in crypto, blockchain, and next-generation financial technology. From my assessment, SoFi's product roadmap is perfectly aligned with where their core customer base wants to go. When it comes to the financial implications of this crypto launch based on my models, from what I've been calculating, if crypto trading drives even a 5% increase in member engagement and cross-buy rates, the impact on lifetime value per customer could be substantial. According to my analysis, SoFi's current cross-buy rate is 40%, meaning the average member uses 1.48 products. If crypto trading pushes that to 1.55 products per member and each additional product generates $100 in annual revenue, that's $126 million in incremental annual revenue across the 12.6 million member base. Moreover, from what I've been studying about SoFi's margin structure, fee-based revenue like crypto trading carries EBITDA margins of 50 to 60% compared to lending revenue in the 20 to 30% range. So according to my calculations, crypto revenue falls straight to the bottom line much more efficiently than loan originations. This is exactly the revenue mix shift that analysts want to see, and that justifies a premium valuation multiple. From my research into Q3 results, fee-based revenue hit $409 million, up 50% year over year, now representing 43% of total adjusted net revenue. According to my projections, with crypto trading, options trading, stablecoin adoption, and blockchain remittances all launching over the next 12 months, fee-based revenue could grow to 50 to 55% of the mix by end of 2026. That transformation from a lending-focused fintech to a diversified financial services platform is exactly what drives valuation re-ratings. So let me update my valuation analysis with the stock at $31.59. From my calculations, SoFi now trades at a market cap of approximately $38.5 billion with trailing 12-month revenue of about $3.6 billion. That puts the price to sales ratio at roughly 10.7 times. For a company growing revenue at 38% with expanding margins, launching groundbreaking new products, and achieving consistent GAAP profitability, that's not expensive in my view. According to various analyst price targets I've been tracking, Mizuho sits at $38, Needham at $36, and Citi at $37. The average consensus from major firms is around $34 to $36. From my own modeling, incorporating the crypto launch catalyst, the stablecoin roadmap, and the continued margin expansion, my updated 12-month price target is $40, representing about 27% upside from current levels. Moreover, according to some longer-term projections I've been studying, the Motley Fool believes SoFi could be a $100 stock within 5 years if execution continues. That might sound aggressive, but from my analysis, the math actually works. If SoFi can maintain 25 to 30% revenue growth, expand EBITDA margins to 35 to 40% as fee-based revenue dominates, and gain market share in crypto and payments, the earnings power 5 years from now could justify a much higher stock price. Alright, so let me update my complete investment thesis based on everything that's happened. From my analysis, SoFi just made a historic strategic move that positions them as the leading digital bank for the crypto era. The first mover advantage as a nationally chartered bank offering crypto trading creates a regulatory moat. The integration into the existing SoFi app drives engagement and cross-buy. The potential to extend to institutional clients opens another massive revenue stream. And the broader roadmap, including stablecoins and blockchain remittances, positions SoFi at the forefront of the next generation of financial services. Moreover, from what I've been studying, the fundamental business momentum remains exceptional. 8 consecutive quarters of GAAP profitability, 38% revenue growth, 35% member growth, expanding margins from fee-based revenue mix shift, and management repeatedly beating and raising guidance. You know, this is not a speculative fintech hope story anymore. This is a consistently profitable, rapidly growing digital bank executing at an elite level. From my valuation work at 10.7 times sales with 38% revenue growth and expanding profitability, SoFi trades at a reasonable to modest premium for the quality and growth profile. According to my analysis, the crypto catalyst combined with the existing momentum creates a compelling risk-reward setup for long-term investors. So here's my updated call. I rate SoFi a strong buy with a 12-month price target of $40, representing 27% upside from $31.59. For existing shareholders, hold and potentially add on any pullbacks toward $29 to $30. For new investors, current levels represent a good entry point before the crypto product fully ramps and drives meaningful revenue. Moreover, according to my risk management framework, I would not hesitate to buy up to $33, and I'd only become cautious above $35 without further fundamental developments. The key catalysts I'm monitoring include crypto trading adoption metrics in the coming weeks and months, any announcements about the SoFi USD stablecoin launch timeline, the Lightspark blockchain remittance product rollout in Mexico, Q4 earnings in late January or early February 2026, and continued margin expansion as fee-based revenue grows. You know, from what I've been watching, any meaningful user adoption data on crypto trading could drive another leg higher in the stock point. The risks I'm watching include crypto market volatility could impact trading volumes and revenue. Regulatory changes could alter the landscape, though OCC guidance provides clarity for now. Execution risk on the stablecoin and blockchain initiatives, and valuation at 10.7 times sales requires continued strong execution to justify. Moreover, competition from Coinbase, Robinhood, and traditional banks will intensify as they see SoFi's success. All right. I think I've covered everything. Thanks for watching, and I'll see you in the next analysis.